Hi, everyone. Larry Berman here, and here's what's on my radar this week. Well, it was an incredible week. A lot of market expectations were cast aside, if you will. Certainly, some of mine were. Was expecting a much more hawkish um, chairman of the Federal Reserve, and it's interesting that I saw in an analysis today. He used the word disinflation in his talk 11 times, and that the Wall Street made a huge focus on that. What they didn't say was that he used the word inflation 100 times. So you have the market that just simply doesn't believe what the Fed is going to be able to deliver. And when the market moves up on what should be bad news, it's universally thought of to be really, really bullish. And so I want to take a look at some of the charts this week and just give you some of the things that I'm thinking of. So here we are late Friday afternoon. You can see that at 3:36, the S&P 500 index is down a little more than 1%. It had rallied back to unchanged on the day. Same with the NASDAQ. Apple, Amazon, Alphabet, Google, the three A's, AAA rated, all had somewhat negative things to say. And as analysts will, they put a lot of positive spins on things. But from a chart perspective, and what we have been commenting on recent weeks is this downtrend channel, and that the falling 200-day average should hold, and we should see the downside. And of course, we broke through that at the end of January, and that caused me to think a little bit harder about what's going on here. And while I recognize the price behavior as positive, I also recognize the market was very, very vulnerable, and from a sentiment perspective, leaning so far one way. So to start the year, end of December, early January, universally expected that the first half of the year was going to be bearish, back half of the year was going to be bullish. Therefore, in theory, everyone was set up for the market to move down and not for, say, earnings to be a bit better than expected, companies not to say things too negative. And frankly, we've seen not a lot of kitchen sink, but enough kitchen sink in terms of we're laying people off, we're cutting costs, and the market's kind of celebrated that as typical end of the cycle. And the challenge I have with that is I don't believe for a minute that anything of the last few years with COVID and the monumental amount of QE and now QT that's being done, that you can normalize anything. So next chart that I'm looking at here is actually going back and looking at not the S&P 500, but the Dow, and looking at it in that period of what we call a secular bear market, where high inflation started to grip the market, started to be a bigger factor, and really curtailed multiple expansion. Everybody investing today, with very few exceptions, me included, were not investing in this difficult period of the late 60s and 70s, where we had high and persistent inflation, and you just did not see the growth come. And it's not that the economies didn't expand, but the multiples corrected. And I think about this period a lot. Not that I think we're going to go into double-digit inflation. I don't at all. I don't think we have the economic structure and setup for that, and the massive amount of debt to GDP in the world just wouldn't permit materially higher rates. But the deglobalization, to me, is a big game changer, which we haven't seen in decades. And I think that's inflationary. And I do believe the inequalities of the world are going to ultimately put more power in labor's hands than in management's hands. So again, TBD on how that plays out over the next decade or so. But one thing we can't throw away is demographics. And the demographics are such that productivity and the size of the labor force growth, the two elements that define real economic growth, are going to be way, way, way weaker than historical. You can't dispute or argue that the world is aging. You can't dispute or argue that the labor force in China, in Japan, in Germany is starting to shrink, and perhaps now coming to the US. Now, through immigration policies and liberal immigration policies in parts of the developed world, you're still going to be able to net gain people in the workforce. But let's not dig into that too much. So, you look at what's going to outperform going forward, and you think about value is going to outperform over growth. And you think about that and you say, yeah, that kind of makes sense, Larry. Actually, a year or two ago, you started to say that buy the equal weight S&P 500 because the average stock is going to outperform the market cap weighted stock. And so value over growth from that perspective. So I was doing a little homework this week, and for the bull and bear pick of the week, I thought I'd have some fun with it because I don't have any really fist pounding. You got to do this week, and here's a great trade. But let's have a look at the IVE. So this is the iShare S&P 500 Value ETF. And I look at the number one weighted stock in the Value ETF, and I get Microsoft. And number 3 is Amazon, and number 4 is Meta. And I just go, what? And I want to pull out my hair. Salesforce, Netflix. You have a lot of what would be considered growthier companies, in this value index. And especially a company like Amazon that really, it's a phenomenal company, but from a value perspective, to be debated. Now, Meta, after its colossal collapse over the last year plus, had a lot of more value characteristics by way of PE. Not surprising to see it rip higher, but you don't think of a company like Meta as a value stock. Well, let's have a look at what should be the other half of this, is the S&P 500 growth. Now, notice you got 411 stocks in the value index. You've got 232 stocks in the growth index, but let's look at some of those names. You got Microsoft, you got Amazon. I'm dumbfounded sometimes. So message this week, folks, is not, bull or bear per se, but still would favor you a bit of value over growth, is that you've got to understand what you own and do a little bit more homework by digging into an index and see what you're getting. Because while ETFs are fantastic, the labeling sometimes could be a little bit different. Have a great week, everyone.